Did you know there are more Payday Loan store locations than McDonald's or Starbucks? With over 12 million Americans taking out a payday loan every year, this industry is proving more harmful than any greasy fast food chain. In this video, we're going to go over the 5 reasons why I think all states should ban payday loans in order to protect their residents.
Payday lending is a $46 billion industry in the U.S. About 12 million Americans borrow more than $7 billion annually.
Reason number 1, these payday loan companies don't do any type of hard credit checks.
I chose Good Money Payday Loans because they're fast and easy.
I chose Good Money Payday Loans because I didn't need a credit check.
They don't care if you have the ability to pay back this loan, and they don't really care if you pay back the loan. Their goal is for you to continue paying interest and fees so that the total that you pay them is higher than the original loan amount that you withdrew. So they couldn't care less if you are delinquent on this loan. This is what makes these loans especially dangerous, because they're targeting people who can't get a loan any other place because they have a bad credit score.
Title loans and payday loans are supposed to be short-term quick fixes for people who can't get traditional credit.
So they're desperate and they're willing to accept these payday loans with any terms because it's the only source that is willing to provide them with money considering they have a terrible credit score. This is just the beginning of the predatory tactics that these companies use when targeting people with these loans. Reason number 2, they intentionally target communities that live in poverty. According to the Chicago Fed, they purposely build their store locations and cluster them in communities that have a higher fraction of residents living below the poverty line. So they're intentionally targeting the most desperate people so that they're more willing to accept their ridiculous terms on these loans. This is kind of like a reverse Robin Hood situation. They're taking money from the poor and giving it to the rich.
To coin a phrase, my dear counselor, rob the poor to feed the rich.
So these big companies are coming and spreading their stores out and clustering them in these poor communities. They're capable of doing this by targeting zip codes that have a higher number of residents living in poverty. Now this ties into reason number 3. They target minority groups. The Chicago Fed also confirmed that these payday loan stores were intentionally built and clustered around zip codes that had a higher rate of residents that don't fit into the non-Hispanic white population. So Hispanics and African Americans were intentionally being targeted, as well as people below the poverty line.
And then when it was time for me to rewrite, I increased it to 400, and that was the start of my payday lender journey.
That one loan turned into how many loans?
At the end, I had a total of 9.
So they think, based on their assumptions about borrowing habits and level of income, that these communities would be better targets for their payday loan schemes. They're intentionally targeting groups that don't have resources, or they've been historically disenfranchised, they have lower wealth as a community, so they have less sources of loans in times of trouble. They have to rely on these payday loans since they don't have any other options. Reason number 4, they charge absurd interest rates.
Are you familiar with the concept of jacked up interest rates?
No.
Then sign here.
So when they offer you a loan for $500 and you only have to pay a $75 fee, it seems reasonable until you realize you're paying the loan back in 2 weeks. So if you do the calculations to get the annual percentage rate of interest on that loan, it's in the hundreds. So they intentionally word their deals so that they seem like a reasonable fee. But when you compare it to any other type of debt, these interest rates are insanely high. There are several states that have banned payday loans entirely, and there are other states that have capped the interest rates so that they don't reach the hundreds. But in the states where there are no cap, the interest rates are regularly over 500%. And in the state with the highest interest rate, Texas, that percentage is over 660%. Now with these incredibly high interest rates, you can see how this situation would get out of hand very quickly if the person misses their loan payment when it's due.
So McLaughlin came here, a title loan place just a few miles from his home. He says the process was simple and quick. They inspected his car and then handed him $1,200 in cash. He agreed to pay $322 a month for a year.
I was making good money. I didn't really foresee a problem paying it back at that time.
But then his leg got worse, and he had to go back to the hospital for another week.
And on Wednesday of the following week, the HR person called from his job and fired him. And on that day, we pretty much lost everything.
But not the loan. After 9 months, the total amount they owed grew from $1,200 to over $3,000. That's an annual interest rate of more than 300%.
Now this takes us to the most important reason why these payday loans should be banned. They put people into a debt cycle that's completely crippling. According to the Consumer Financial Protection Bureau, 4 out of 5 payday loans are rolled over or renewed. So to explain what that means, if you take out a loan for $500 and you have a fee of $75, at the end of the 2 weeks, if you can't pay the $575 total, you might just pay the fee and just let the rest of the loan continue accruing interest and accruing late fees, or you just might not make any payment at all, accruing more late fees and more interest on the principal, which, depending on the company, that interest amount might be added to the principal and it's earning interest on that total. So the $575 total is now the principal on your loan.
That quicksand is trapping a lot of borrowers. One study found that 76% of payday loans are used to pay off previous ones, a revolving door of debt with increasing interest.
So if people are renewing these loans, it means that this annual rate is actually accurate. It's not that it's just a 2-week loan, that it's only 600% because you have to pay it back in 2 weeks. It's an actual annual rate that they're extending over months. So they're paying a 600% interest rate over months. Pew Charitable Trust found that the average payday loan of $300 took over 5 months to pay off. So these loans that are originally designed to be a 2-week loan until you get your paycheck actually end up being a long-term debt that people are saddled with an incredibly high interest rate. There's no better statistic to highlight this issue than the fact that the average payday loan is about $375. Yet the average total in interest and fees paid on a payday loan is over $500. So that shows that people are paying more in fees and interest than the original amount that they're borrowing, showing that more people are rolling over or renewing their original loan, so they're not paying it back in the time that the original agreement of the loan decreed. They're paying it back over months, and at a 600% interest, they end up paying more than the money they originally borrowed. So the main issue with these loans, even though they're very convenient for people who have an emergency expense that comes up and they don't get paid for a while, is that they put you in a debt cycle that you will end up regretting in the future. There are surveys that show over 90% of people who took out a payday loan regretted ever doing it. It just makes your financial situation worse. There's no situation where a person takes out a payday loan and they end up coming out of the situation better than they were before. At best, you break even. If you're really good with your money and you make sure to prioritize paying off the debt, it might not be so damaging. But for most people who take out a payday loan, they're not in this situation because they have a good history with managing their debts. It's usually people with terrible credit scores that can't get a loan from any other place. Now, whenever the prospect of banning these loans is brought up, people usually counter with the fact that if people can't get these loans from these payday loan stores, they might have to go to more shady places, more shady options like a loan shark or organized crime, pretty much an underground or a black market source for these funds.
Further, Brennan says a rate cap will actually harm the people it's intended to help.
It isn't like when the industry goes out of business, people are going to stop needing money. They're going to have to turn to online loans, illegal sources, and something that the state can't regulate.
There are alternative sources for loans that people can take out, like payday alternative loans that have capped interest rates.
But Hickey says in reality, there are plenty of ways to help people who need money without charging them triple-digit interest.
As an employer with employees, I would give a payday advance. I know Steve Hildebrandt does at his coffee shop. He will lend somebody money on their paycheck at 0% interest. And maybe there could even be regulation on that. 4 times a year, it's an employee benefit.
So I think these payday loans should be banned in all states with no exceptions. I think the convenience is countered by the risk, and that at the end of the day, millions of people are being put in terrible financial situations just to get the convenience of some quick cash while they're waiting on their paycheck. It might be beneficial to have a government agency that provides loans like this in emergency situations where people can apply and get a loan no matter their credit history in extreme emergency cases. But we have to provide alternatives so people can avoid these predatory loan providers. So to sum things up, these payday loan companies don't do any type of credit check. They target communities living in poverty, they target minority communities, they charge incredibly high interest rates, and they leave people stuck in crippling debt cycles. I think those reasons are enough justification to push for banning them in every state. And that pretty much wraps it up. Let me know if you agree or if you have any counter arguments for why these stores should remain open, and make sure to like and subscribe.